Good morning, members, and welcome to the second webinar of December month for current financial year. And wish you a happy new year again to all of you. The topic for the day is overview of recent updates and amendments under Companies Act 2013. And the second topic is intricacies and deadlines of annual filing under Companies Act 2013. And the speaker for the day is CS Raj Kapadia ji, who is well known in this field. So before we start, so I am running the institute motto. For that, I am sharing my screen.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तदेव शुक्रब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनाद्यपि कश्चन एतद्द्वैता 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 एतद्द्वैता.
Thank you. So now I am formally introducing Mr. Kapadia. So CS Raj Kapadia is a member of Institute of Company Secretaries of India and law graduate from Mumbai University. He is the founder and proprietor of RK Kapadia and Associates, providing full range of services to the global clients in setting up business in India and also handhold them under the applicable compliance, regulatory and statutory aspects. Voice is not there?
It's perfect. It's perfect. Narendra bhai, if you can just increase the volume of your device, otherwise the voice is okay.
Yeah. He is registered as a trademark professional under the Trademark Rules 2017 and provide intellectual property rights services. He is holding postgraduate diploma in digital business from California University and MIT Sloan. He is convener the Ghatkopar Knowledge Center of the ICSI. He is a co-opted member of the Research and Publication Committee of the Chamber of Tax Consultants. He has addressed the Institute of Chartered Accountants of India and study circles of WRC, ICI on the range of topics and has been a faculty before various bodies, including IIT Indore. He is also contributor articles for professional bodies, including the CCGRT of ICSI and Chamber of Tax Consultants. With this, I welcome Sri CS Raj Kapadia ji to our JB Nagar Study Circle. Over to you, Raj Kapadia ji.
Hello, my dear fellow professionals. Good morning to all the participants, attendees who are attending this session. Thank you, team of conveners of JB Nagar CPE Study Circle, WRC of ICAI, for giving me the opportunity to address the professionals. And we are gathered here on a Sunday morning, and considering the how it has gone with the all the deadlines coming up, whether it's tax audits or return filing, I don't think the professionals would have had the opportunity to enjoy a Sunday, to relax at home. So I'm sure, like, we don't even remember when we would have just relaxed on a Sunday. So let's start this session, I'll just share my screen. Yeah. So is it visible? Is this visible?
It is visible.
Yes, sir.
Thank you. Thank you very much. So, as we just saw that there are many deadlines currently under the this various laws, whether it is the MCA, whether it is the income tax, and the stand of the government is very clear that the compliance, whatever is due, has to be done, and the same has to be delivered in whichever way possible. There have been heavy late fees which have been also prescribed, whether it's in the Companies Act for all the annual returns, annual filings which are due, to the tune of 100 rupees per day. So Section 403 of the Companies Act says that for every such delay, 100 rupees per day late fees would be charged, whether it is the form AOC 4, which is for financial statements, or NGT 7, which is for the annual returns. Deadlines in most cases have not been increased. Of course, under the Companies Act for the corporate, the deadlines have been increased. We will be discussing it in the later part of this session. What are the deadlines? What are the intricacies? But for other compliances which are ongoing basis, and also for the LLP's annual compliances, the deadlines have not been increased. They were at 31st of December, and they have not been increased any further. The stand of government is very clear that it is looking for a good governance culture in India, and that the corporate governance assists actually in nation building. And in a way, I can tell that the view of the government was made very clear when the Home Minister, Shri Amit Shah ji, he addressed to a gathering of professionals very recently, and where he quoted about corporate governance and the importance of corporate governance. I'll quote him in Hindi. He said that किसी भी देश का विकास एक मजबूत कॉर्पोरेट गवर्नेंस के इंफ्रास्ट्रक्चर के बिना हो ही नहीं सकता, क्योंकि कोई इन्वेस्ट तभी करता है जब उसके सिस्टम पे भरोसा होता है, कोई इन्वेस्ट तभी करता है जब सिस्टम की ट्रांसपेरेंसी पे भरोसा होता है, एंड कोई इन्वेस्ट तभी करता है जब गवर्नेंस की खराई, गवर्नेंस की प्रॉम्प्टनेस पे भरोसा होता है. In a way, we can actually say that this is the view of the government with regard to good corporate governance culture. And it has been seen that filings are mandatorily required, and the late fees of up to 100 rupees per day, which are non-discretionary. It is levied by the system itself. And I have seen in some cases recently that there have been cases where companies have been incorporated, LLPs have been incorporated, but filings which are required, whether in LLP it is the Form 3, which is for the deed, Form 8, Form 11, they have not been carried out. And for even 1 year of a delay, so incorporated in 2020, and for 21, there have been no filings which have been made. In spite of the extended due date, the late fees have extended by many thousands of rupees, if not in lakhs. So that is the state, and that is the seriousness with which the government is looking at it. And if in stats, from a stats point of view, statistics point of view as well, if we see that the Indian corporate sector has boomed like anything in the recent past, with many initiatives as well, whether it's the Atmanirbhar Bharat call which the Prime Minister had given, or Go Vocal for Local. All of these have led to a boom in the startup ecosystem as well. Just in 2021, it was almost 41 unicorn startups were recognized in India, whereas since the start, since 2011, 2012, there have been only 80 till date. Out of those 80, or 79 or 80, almost 41 unicorn startups were recognized just in 2021. So this is how the corporate ecosystem, the startup ecosystem is growing in India. And by unicorn startups, I mean a market valuation of over $1 billion. That is a huge sum of money. And there are many stakeholders as well who are involved in the company. This is a very landmark judgment based on which the corporate governance, I would say that corporate governance foundation was laid by this rule, the Torkond rule. It was a leading judgment, and one part of the judgment I have quoted here, that any outsider or stakeholder dealing with the company is entitled to assume that the internal requirements and the procedures have been complied with. This is a base on which this judgment was made. And to give an example, there have been many recent orders as well, which have been passed by the registrar of companies of different jurisdictions. One such order, which has levied a hefty fine, or I would say penalty of rupees 1.5 crores on a company for non-compliance of Section 42. Section 42 is for private placement and offer of securities. So why this heavy penalty was levied? Because the resolution which the company had prepared did not contain certain disclosures which were required. The reference to Section 42 was to be made, which was not made. There were certain disclosures which were not made. There was a separate bank account which every company is required under Section 42. If for any such inflow of money has to be in a separate bank account, and then the shares have to be allotted, which was not complied with. The offer document and the resolutions passed, they have to be filed with the MCA in a form MGT 14 before circulation of the offer letter. That was also not complied. So this is what it is. If the company orders offers securities and asks for money from the stakeholders, then the stakeholders also are entitled to assume that internal requirements and procedures have been complied with. These were not complied, which led to such penalties. So there are many stakeholders. Shareholders are there, creditors are there, employees are there, government is there. There are many stakeholders associated with the corporate, and the timely disclosures, compliance requirements are required to protect the interest of those stakeholders. This will lead to good corporate governance culture. So we will, and government, the government is also on a learning curve. There have been ongoing amendments and updates across different acts. And in a recent forum, Honorable Finance Minister Srimati Nirmala Sitharamanji, they have asked the professionals to help the government to weed out the unnecessary compliances. So it is all still in work in progress, and we can only hope to see that the compliances are reduced, but at the same time, good governance is also followed. So let's start with the first part of the session, which is the legal, the latest updates, the relevant latest updates, which are either already in force or in very near future they would be effective, and what precautions that we need to take as professionals and in our advice as well to the corporate. So first of all, the very important amendment during 2021 was with regard to the corporate social responsibility. I would say that the entire regime of the CSR provision was changed with this amendment. Previously, the CSR spending was not compulsory. I mean, there was option that it can be carried forward, and the board had to disclose the reason why it has not been spent. But now with this amendment, this CSR spending has been made compulsory. There is no option of carry forward except in certain cases which we will talk about. So first thing is, as we told that this is with effect from this current year, for the year ending March 2021 as well. There is no option of carry forward. So here the spending has been made mandatory from financial year 2020-2021. So in between there was a proposal to also levy heavy penalties, including imprisonment, but that provision was, this offense was decriminalized, and only now monetary penalty was would be levied. And so CSR spending was made mandatory. The unspent amount only in case of an ongoing project would be allowed to be carried forward. An ongoing project also will have to be defined, and such period of carry forward is only up to 3 years. Only up to 3 years this amount can be carried forward, and such an amount which is not actually spent during the year has to be deposited into a separate account known as unspent CSR account. This disclosure has to be made by 30th of April of the relevant year. So this is the only case wherein unspent amount can be carried forward if it is an ongoing project up to 3 years. If not spent on an ongoing project, then it is to be transferred to Schedule 7 fund. Schedule 7 contains all the activities which are recognized as CSR, and there are also funds mentioned, for example, the PM CARES fund, the PM CARES fund, and the Prime Minister National Relief Fund, the Clean Ganga Fund, fund for the veteran armed forces. There are certain such funds mentioned. If such a amount is not spent in the relevant year, say for example in 2021-22, if the liability would not be spent, then by 30th April 2022, if it is an ongoing project, it has to be deposited into a separate account known as the unspent CSR account. And by 30th, if there is no such ongoing project, then by 30th of September 2022, it has to be deposited into any of these funds which are mentioned in Schedule 7. This is one of the important amendments. Impact assessment is to be carried out for any CSR spending more than rupees 10 crores. It has to be done for each outlay which is exceeding rupees 1 crore. So impact assessment for more than rupees 10 crore, and for each outlay more than rupees 1 crore and which has completed 1 year. Such an impact assessment has to be carried out. Report is to be placed before the board, and CSR activities and the gist of policy has to be disclosed on the website of the company. There is a new format of the CSR annual return which forms a part of the board report. This is very detailed as compared to what was the situation before this amendment. It is very detailed annual return. There is a gist of the policy which is to be mentioned, the details of the committee, projects, if any identified ongoing projects which we talked about for 3 years. So that has to be mentioned. If there are if any excess spending of earlier years set off or carried forward excess spending, that has to be mentioned. If any amount is transferred to the unspent CSR account, then that also has to be mentioned there. And the details have to be contained. And if the CSR is done through any trust, society, or a Section 8 company, then the track record of 3 years is a must, and such an entity, this is also an important amendment, that with effect from this year, the 2021-22, if the corporate social responsibility is carried out through a recognized entity or this Section 8 company, then such entity has to be registered as a CSR entity in form CSR1. There would be a unique ID number which would be obtained, and this would be unique to each such entity. Without this filing, such entity cannot carry out CSR activities. And penalty mentioned, which is twice the amount which is transferred to the Schedule 7 fund or the unspent CSR, twice that amount or rupees 1 crore, whichever is less. And this is for the company, and for the officers, it is 1/10 of the amount which is to be transferred to Schedule 7 or the unspent CSR amount account, or rupees 2 lakhs, whichever is less. This is what is the entire regime of the CSR provision. Excuse me. Next is another important update, which is the general meetings through audio-visual means. This regime was introduced as a relaxation under the under the restrictions of COVID-19 in 2020, and the validity period has been extended. It was till 31st of December, and then it was extended further till 30th of June 2022. So till 30th of June 2022, all such general meetings, including annual general meetings, can be held through video conferencing or other audiovisual means. This is just briefly the gist of the circular which was introduced. So that is available on the site. I'll just go through very briefly. That recording of such meeting, which is the video conferencing or other audiovisual means, the recording is to be maintained and also made available on the website in case of public companies only. Two-way teleconferencing is to be allowed. The members should be enabled to participate through audiovisual means to ask questions, to ask queries, to clarify certain aspects. So two-way audio-video conferencing is to be allowed. And at least 1,000 participants can participate, the members can participate. So that such a situation on first come first served basis. So such a also software is to be mentioned. The system which is there has to allow at least 1,000 such members, which is of course which are required to provide e-voting facilities. This is for those companies. And chairpersons of the committees, auditors are to be allowed without any restriction of 1,000 members. So that 1,000 members restriction would not be applicable to committees chairman, the chairman of the committees and the auditors. Attendance via the virtual the virtual mode is to be counted. Independent directors and the auditors or representatives can attend such meetings. Remote e-voting is to be provided as per the Act. Chairperson is to be appointed and as per section 104 if less than 50 members are present at the meeting, else through voting through e-voting during the meeting, unless the articles contain otherwise. Then if any specific provision in the articles, then that provision is to be followed. If it is less than 50 members present at the meeting, then voting can be through e-voting or through show of hands. In other cases, it shall be through e-voting. Proxies is not allowed. The purpose of having the audiovisual meeting is that the members can attend from any location. So proxies are would not be allowed. Members can attend through any remote location. Of course, the corporate members, the members who are not individuals, body corporate, HUF, those members, the trust, those members can of course appoint their representatives as per the provisions of the Act. Notices shall include all the disclosures of the framework and shall be displayed on the website. It should also include all the notes, the links, the contact numbers of the concerned person in detail, so that the concerned stakeholder can attend it without any difficulty. And all the resolutions are to be filed with the ROC within 60 days, which I have mentioned below as well. That all resolutions, whether special or ordinary, they have to be filed in form MGT14. And with the companies which are not required to provide facility of e-voting, the provisions relating to attendance and presence and conduct, they are the same as above. And where poll is specifically called for in the meeting, including for appointment of chairman, the companies shall have a dedicated email address which shall be conveyed to all the members for voting. Confidentiality and safeguards of such email address is to be maintained. Similarly, this is for audio-visual board meetings as well. Now, this is a very important amendment. Since the start, there were certain, since the date of, from when this Companies Act 2013 was notified, there were certain items which were only to be discussed at a physically convened board meeting and not through a virtual mode or not through a circular resolution. These items, such items were mentioned in the Act as well as this Rule 4 of Companies Meeting of Board and its Powers Rule. However, owing to these difficulties of COVID-19 and the restrictions, this amendment dated 15th June 2021, this Rule 4 was omitted. So now the agenda, which includes approval of financial statements, the prospectus, audit committee meeting for consideration of financial statements, and approval of amalgamation, demerger, acquisition, takeover. Such items can now be also discussed at the virtual audio-visual board meeting or a committee meeting. Now, this is also relating to this. There is a recent adjudication order. So we have seen many adjudication orders recently by the ROC, by the regional director, and we will discuss this further as well in the later part of this session. How the new version of the NCA would deal with such adjudication. But there is a recent this ROC order wherein the ROC has imposed penalty on a company which has approved the financial statement. The first point here, which is as per this amendment, can be done by audiovisual means. ROC has imposed penalty for approving this financial statement via circular resolution. Now, this is definitely not allowed. Such item cannot be passed by a circular resolution. It has to be passed at a validly convened board meeting. Option here is given that validly convened, the same can be through audiovisual means, but it has to be at a board meeting. Circular resolutions is not allowed, is not permissible. So this is also mentioned in the secretarial standards. So because of this, this contravention of secretarial standards, the ROC imposed penalty on this specific company. So as I said, these four can now be can now be dealt with on a audio-visual board meeting. They can now be approved at audio-visual board meetings, and this rule was temporarily removed in 2020. Owing to the difficulty, it was temporarily relaxed, but in 15 June 2021 onwards, this has been removed, omitted altogether. Just very briefly again, the procedure, how these audiovisual board meetings are to be conducted. They are mentioned in Rule 3 of the company's meetings of board and powers rules. Very briefly and quickly, I'll deal with it. Of course, the two-way communication has to be mentioned. The necessary arrangements are to be made for avoiding the failure of connection. The chairperson has to ensure that availability of proper equipment and facilities for two-way transmission is allowed. Proceedings have to be recorded. Minutes have to be prepared and signed as mentioned in the Act and the secretarial standards. So that has to be followed. Safekeeping and marking the tape recording and other electronic recording. So wherever, in whichever media such recording is provided, that recording has to be kept as a safety measure, that has to be preserved and kept. They are a part of the records of the company at least till the time before the completion of audit of that particular year. At least till that time, these have to be safely kept. The chairperson also has to ensure that no person other than the concerned director are attending or have access to the proceedings of the meeting. Very important, because of course board meeting, it's a board meeting and very confidential, so that access control also has to be preserved, and to ensure that all participants attending the meeting are able to hear and see the other participants clearly. Two-way communication, the audio and video of the participants have to remain open throughout the meeting. And there is a roll call as well at the start of such audiovisual meeting. The roll call, the concerned person has to give has to say the name, the concerned director or the invitee has to say the name, the location from where the person is attending, whether the person has received all the agenda and papers, the working papers, notes for the meeting, and also to ensure that no one other than the concerned director or the special invitee is having access to the proceedings of the meeting and proceedings of the meeting at the location mentioned in the clause B above. After the roll call, the chairperson has to, or the CS as the case may be, has to inform the board about the names of person other than the directors who are attending. So the special invitees have to be introduced. chairperson has to ensure that the quorum is present throughout the meeting. No person shall have access to the proceedings, access of the proceedings at the board meeting without the permission of the board. At the end of the discussion, again, the chairperson or the company secretary or the concerned or the same also may be delegated to another attendee. There has to be a summary of the decisions taken on such items. So on all the items, there has to be a summary of the decisions taken, including the role, the voting as well. So the number of members who voted for the agenda and the number of members who have dissented from the decisions taken by the majority, whether it's the directors or special invitees, the committee members. So for and against, both have to be mentioned in such a summary, and the draft minutes so recorded shall be preserved by the company till the confirmation of the draft minutes in accordance with the normal provision. So that is as it is. Minutes shall also disclose the particulars of the directors who attended the meeting through video conferencing or other audiovisual means. So that roll call which we have taken, of course, the concerned director with the location, all details have to be mentioned in the minutes, and draft minutes shall be circulated among the directors within 15 days of the meeting, either in writing or in electronic mode, as the case may be decided by the board. This is another important amendment which has been introduced relating to eligibility of person to be appointed as independent director. Earlier, there was an online assessment which everyone had to make, but there have been certain exemptions. Certain people who are exempted from taking that online this assessment test for being eligible to be appointed as independent director. So this one, the left part of this screen is the amendment is there in the italic section. The first point is that the person which are not required to pass the online proficiency test if the person has served for more than 3 years as a director or KMP in a listed public company or an unlisted public company with paid up capital more than 10 crore rupees, or a body corporate on any recognized stock exchange, body corporate incorporated outside India with a capital of $2 million and more, or any statutory corporation. So a person has to be a director KMP associated with any of these companies or body corporate. And the second one, which is the amendment, is that the concerned this concerned director of KMP as above are appointed in the pay scale of director or equivalent or above in any ministry or government and has experience in matters relating to commerce, finance, industry, corporate affairs, and affairs relating to government companies or statutory corporations. This is one part of the amendment, and which is very important for us as professionals. Any individuals who have completed 10 years or more as a practicing advocate, practicing chartered accountant, practicing cost accountant, practicing company secretary, either of these 4 professions shall not be required to pass the online proficiency self-assessment exam. This is an important amendment which has been introduced. Now we will move to certain important amendments which would be applicable, which are already applicable for the current year, 2021-22, but from 31st March 22 as well, they would be relevant. First part of this amendment is the maintaining of books of accounts kept in electronic mode. This is in effect from 1st April 2022. So proviso to Rule 3 of Companies Accounts Rule 2014 has been amended, and they are with effect from 1st of April 2022. Hardly 3 months now, so the same needs to be checked, and wherever it is required, appropriate amendments have to be carried out. It states, I'll read through what this amendment states. Every company which uses an accounting software for maintenance of accounts shall use only such software which gives audit trail of each and every transaction creating edit log of such change made in account along with date of such change, and also ensure that such audit trail cannot be disabled. Accounting software with the audit trail along with log of changes made, and also such trail cannot be disabled. So this is very important, and compliance and audit reports also have to report this compliance with effect from 1st April 2022. We'll discuss the same as well. Another important part of amendment which is upcoming in next 3 months onwards. It's already applicable, but for financial statements of 2021-22, this would be applicable, which is the additional disclosures which are applicable under Schedule 3. They are with effect from 24th of March 21. They have been notified. So some significant part I have highlighted here. The first part is detail of promoter shareholding has to be clearly mentioned with percentage change in a year. Any change in promoter shareholding have to be mentioned along with details as well. Aging schedule of trade payables with separate disclosure for MSME and disputed dues to MSME. Trade payables aging schedule due from up to 1 year, 1 to 3 years, and so on. We have to give with a separate disclosure for MSMEs, payables to MSMEs. We'll discuss the MSMEs in the second part of this session. Reconciliation of each class of assets of tangible and intangible assets. That reconciliation schedule is to be prepared. Trade receivable aging schedule, just similar to trade payable. The receivables aging schedule also would be required. Whether disputed receivables, undisputed receivables, whether considered good, doubtful, all disclosures have to be mentioned. And there are additional disclosures to financial statements, wherein details of immovable property not held in the name of the company has to be mentioned. Separate disclosure for loans and advances specifically to promoters, KMP, directors, related parties. Any such loans and advances given to such promoters, directors, KMP, and they are related parties and related parties of the company. So this schedule separately is to be mentioned as per the Companies Act. Assets under development schedule, whether it's capital work in progress or intangible assets under development. So that aging schedule has to be mentioned. Whether the company is declared as a willful defaulter by any bank or a financial institution. If so, then that has to be disclosed. Whether the company has any relationship with stock of company and balance outstanding in such companies. If there is any such transaction, that has to be disclosed. Charges or satisfaction which are yet to be registered and the reason for not being registered, that has to be checked and stated. Ratio analysis, this is very important. So ratio analysis is to be done, and also if there is any change with respect to previous year exceeding 25%, any change with respect to previous year more than 25%, then such for such change, the reason for such change also is to be mentioned. Now, what are the ratios which are prescribed? The current ratio, current assets, current liabilities, the debt to equity ratio, debt service coverage ratio, the return on equity, the inventory with respect to turnover, the trade receivables with respect to turnover, trade payables with respect to turnover, net capital with respect to turnover, the net profit earned, the net profit ratio, return on capital employed ratio, return on investment ratio. All these have to be mentioned, and also the auditors have to report on such ratios. We will discuss in the immediately next slide, which is on CARO. Wherever CARO would be applicable, the auditors have to also take a view on such ratios. The CSR disclosures and activities have to be mentioned specifically. We have discussed the amendment of CSR, so that has to be disclosed in Schedule 3, in the additional disclosures. And if companies are trading or investing in cryptocurrencies, then they have to disclose such holdings of such cryptocurrencies, the profit and loss earned from such cryptocurrencies, and any deposits or advances which the company is holding. Next, we come into the CARO provision. Also, CARO 2020, which is applicable with effect from 2021-22 financial year. So again, from 1st April 2022, like Schedule 3 amendment, there will be CARO amendment. So very briefly, certain points have been highlighted here, which are amended. Of course, there are more as well, but more important points are being highlighted here. Excuse me. The first part is whether property, plant, equipment have been valued, and if they have been valued, whether that valuation is by a registered valuer, auditors. So these are points where auditors have to report. First point is property, plant, equipment have been valued. Excuse me. Whether any proceedings initiated against the company under the Benami Transactions Prohibition Act of 1988, whether company has sanctioned a working capital limit exceeding ₹5 crore in aggregate during the financial year, during the relevant financial year. If any such limit exceeding 5 crores are there, then that has to be disclosed. And whether in such a case, then wherever applicable by the company or financial institution from where such working capital limit is sanctioned, whether any quarterly returns or details are filed, then the detail of same also have to be mentioned. Whether any loan or advance in nature of loans granted during the year has renewed, extended, or fresh loan is given to settle the overdues of existing loans to same party. If such a case is there, then details is to be given as and this is not applicable for cases whose principal business is to give loans. But for other cases, if any such case is there, then that has to be reported. Whether transactions not recorded in accounts have been surrendered or disclosed as income, and whether previously unrecorded income is also properly recorded. This is another update. Further, whether the entity is termed willful defaulter by any bank, financial institution, or lender, so that based on the disclosure in the note, this report is to be given. Whether term loans are used for the purpose for which they were obtained, and if not, then details are to be given. Whether any loan taken for obligation of subsidiary, associates, joint ventures, then details and nature is to be reported. This is another. So just imagine the type of checking and reporting which would be required with this CARO 2020. If any resignation or change in statutory auditors, and the same also is to be reported, whether the auditor has taken into consideration the issued objections, concerns of the outgoing auditors. The same also has to be checked. And on the basis of aging and ratios, which was at trade payables, work in progress, assets work in progress, trade receivables, all aging, and the ratio analysis and other information, auditor's knowledge and other factors, whether auditor is of the opinion that the company is capable of meeting obligations as and when they fall due within 1 year of balance sheet. Very important point. This has to be also reported. And these two last points, which are relating to the CARO provision, whether in other than ongoing projects, the company has transferred unspent amount to a Schedule 7 fund within 6 months from the close of financial year. That is by September 30th of the relevant year. The guiding, the supporting section, the underlying section is section 135, subsection 5. Such disclosure is to be checked and made. And whether any unspent amount has been transferred to unspent CSR account under section 135, subsection 6. So unspent CSR, which is for ongoing projects. So this was about the Schedule 3 accounts, CARO provision. Next, very briefly, we will discuss about the this new version which has been proposed. So first phase of the new version of MCA was announced, was issued somewhere in May or June of the previous year. And it is now forthcoming, the subsequent changes. It would be a a comprehensive change of this new version. And very briefly, the features. So this is I've taken these from various experts and the ministry officials who have quoted on various forums. I've taken these things out of them. We are still awaiting the official details of the new version. So this version has to be launched in phases. First phase was rolled out in May of 2021. Complete rollout is forthcoming. There will be separate modules for e-scrutiny, e-adjudication, e-consultancy, and compliance management. So e-consultancy module is already in place. In the first phase, we have already been given e-consultancy module, and there is a revamped home page of the MCA portal in the first phase, and the new logo of MCA has been introduced. There is also a night mode on the website. There is the option to adjust the font. There are separate tabs for the different services. Different ebooks also have been placed on the website, and the e-consultation module has been launched. And these are the basic 5 modules which would be launched in the new version. There would also the officials have told that there will also be mobile apps as well for various requirements as well. So just in line with the new income tax portal, we will also have the new MCA portal very soon. First would be the e-adjudication module. As we discussed about the various orders, more and more notices which the companies are receiving these days. So that would now be completely taken up in the e-adjudication module of the new portal. It would be a digital transformation of adjudication, and it would be all online e-hearing. There would be an e-consultation that is already here. So any public consultation on the proposed acts, rules, amendments would be invited. The public view would be invited on the same. E-books, which would be digitization of acts, rules, regulations administered by the MCA. That is already there in the first phase. So e-books have been introduced. Data dissemination from government to government and government to businesses. So from various sources already in the income tax, this portal, we have already seen whether it is the transaction statement, TIS, or the annual information statements. All these from various sources, these documents, the data is being collated at a single place, and it is available. Similar way, we would have this data dissemination from various sources for the corporates as well. Then there would be a compliance management system for conducting compliance checks, reminders, identifying defaulters. So that also would be available. And very briefly, the features would be that there would be, it is proposed actually that there would be web-based forms for the simpler forms which are there instead of the offline PDF forms. The web-based forms would be there. We would have to enter the information just on the lines of that we have for the DIR3 KYC, which is there, the web version of that is there, or we have the Spice Plus forms which are there for incorporations, which are web-based forms. The form for the LLPs as well, the RUN, which is for name approval, which is a web-based form. So the similar way we might have for the simpler compliances which are there, the web-based forms. Also on mobile app, such compliances can be done, which is what we have learned from the government officials. There would be a new format of master data. Details pertaining to jurisdiction of ROC would be there, NCLT jurisdiction, the auditor's details would be there, financial information would be there on the master data. There would be web-based forms as we discussed. The size of attachment is to be increased. It's one major issue which has been there, that 6 MB has to be is the maximum permissible size. All information have to be packed in 6 MB. Hopefully we will have a larger size option. Access to selected service also via mobile app, which we have discussed. And this very briefly, I'll discuss about this AGM extension, which is already done. So by ROC has had ordered had the ROC circulars in September 21 have been issued for extending the due date of the AGM by 2 months. For 2020, it was for 3 months. For 2021, it was for 2 months. In most cases, by November end, the due date is over. So companies which could not hold their annual general meetings by November 2021, and the AGMs were held in December 21 or currently in January, or they are still yet to be held, then in such cases, the only option would be for compounding, to go for compounding. This had come as a relief for companies which were not able to hold AGM by the due date under Section 96 of Section 1. And this extension was given irrespective of the GNL1, whether it was filed, whether special request was filed for extension, whether it was granted or whether it was rejected. In all companies, blanket extension was given up to 2 months for 2021. And very briefly, the Section 96 of Section 1. Very briefly, I'll discuss there are three this due dates which are there for holding the AGM. First due date is for first AGM of the company which has been incorporated during the relevant financial year. Then in that case, the first AGM is to be held within 9 months from the end of the relevant financial year, which in most cases would be 31st of December 2021. Assuming for 2020-2021 company incorporated during 2020-2021, the first AGM is to be held by 31st of December 2021. Next AGM, subsequent AGM within 6 months from the close of the financial year, which is in most cases is 30th of September. And the gap between two consecutive annual general meetings should not exceed 15 months. These are the three deadlines which are mentioned, and pursuant to this order, the due date was extended by the ROC by 2 months. Mind you, we have discussed in the earlier slide about the audiovisual general meeting, and that due date extended till 30th of June 2022. Please don't confuse this with that. This due date is for 2021, the due date of holding AGM, which is already over. That was as a relaxation measure wherein audiovisual general meetings could be convened. Before we proceed to the second part of this session, this is something also very important which has been amended in the previous year 2021, and by means of the budget speech, this was amended. This announcement was made by the Honorable Finance Minister. The budget speech, the definition of small companies was increased, and the new limits now, with effect from 1st of February 2021, are paid up capital up to rupees 2 crores and turnover up to rupees 20 crores. 2 crores, 20 crores. If the company has to satisfy both these criteria, so if any one of the criteria crosses, then it would automatically cease to be a small company. It is important because there has been, in a way, a separate regime altogether prescribed for a small company or a one-person company to ease the burden of compliance, and there are lesser compliances, lesser certification, lesser disclosures for small companies and for one-person companies, which is why this is important to note before we move on to the annual filing. Features of small companies. So what is changed is that only private limit company can be a small company, and both conditions have to be fulfilled, 2 crore, 20 crore. Only 2 board meetings are required in a year for small company, but the gap between such 2 board meetings have to be more than 90 days. They are exempted from preparing a cash flow statement. There is an abridged version of board report which has been prescribed under Rule 8A. We will discuss the same. What are the restricted, what are the relaxations and what disclosures are required and what are not required. There is a separate annual return as well, which has been prescribed MGT 7A, which contains relatively lesser information to be disclosed. So that is also a relaxation. And there are certification of certain compliances is not required for a small company or a 1% company. So professional certification, without such certification also such compliance can be carried out. And it is also proposed, I mean, it is not yet in act stage, that audits also requirements might be relaxed for such small SMC companies, but that is all still in a proposed stage, not notified. Features of OPC as well, like small companies, the 1% companies also, the definitions underwent a major change in the budget speech of 2021, and on the same day of the budget speech, the notification was issued. There, the OPCs have been issued for the first time in the Companies Act 2013, and it is basically a push towards entrepreneurship, and basically it is a benefit to entrepreneurs who can get a benefit of both a proprietary concern as well as of a corporate entity. So this is the benefit. And as we discussed, the amendment in the budget speech, which is Indian citizen, whether residing in India or otherwise, can form OPC. This is an important amendment, which now India has invited NRIs also who can form OPC. Whether residing in India or otherwise, NRIs can also form OPC in India. This is expected to be a big boost to entrepreneurship and to making India to Atmanirbhar Bharat. This is an important amendment. Days stayed in India for such a non-resident also have been reduced. Instead of 180 days, now the person is required to stay only for 120 days, only for OPC. OPC, the limits are paid up capital 50 lakhs, turnover up to 2 crores. If any of these exceeds, then within 6 months, it has to be mandatorily converted into a private company. There is a new INC 6 form which has been notified for converting into a private company, which is also part of this amendment from 2021. And requirements of AGM is not applicable to OPC. Annual accounts have to be filed within 180 days from the close of the financial year, the 11th financial year. For 2021, the due dates have been extended, but that we will come to in a later part. But this is what is there. Excuse me, please. I'll come in a minute. I'm so sorry, someone was at the door, so I just a minute off. So this was about the features of OPC. Now we will come to the second part of this session. So we discussed about small companies and OPC. So there are separate regimes which we will talk about in the second part. So these have been notified under the this Companies Act by way of various amendments from time to time. So now we come to the second part of this session, which is the annual return and the intricacies of annual filing and the various deadlines as well. So to begin with this second part of this session, which is the deadlines for annual filing, I make use of an example. Considering the fact that there is not one return, but there are multiple deadlines throughout the year, like spread across the year. Some due in April, some in June, September, November. So that's why I make use of a very basic example to understand the various deadlines. Let's see. Let's consider that there is this like we all are Mumbaikars mostly in this attending this session. So we associate mostly with a Mumbai local. So let's assume that this is a photo of a Mumbai local which is leaving Churchgate station. Let's assume that this local is known as the annual return compliance train, and it carries out only one journey in a year, and it starts its journey on 1st of April of every year. All companies and LLPs have to board this train at some point or the other during the year, and it starts. So it is starting this journey on 1st of April of relevant year, and let's see how the journey goes. The first stop, it does the journey, and the first stop that this train reaches is the return of dues to MSME. This first stop is on 30th of April. 30th of April is the due date for this return of dues to MSMEs. Let's just first see what is the brief provision. Section 15 and 16 of the Micro, Small and Medium Enterprises Development Act of 2006 is the governing section by which this requirement has been introduced. This Micro, Small, Medium Enterprise Development Act, MSMED Act of 2006. This is the governing act for MSMEs. Payments made to MSME registered suppliers within the due date or the date agreed upon. This is what is mentioned in schedule section 15, read with section 16. Payments have to be made within the due date or the date agreed upon. Such due date shall not exceed 45 days from the date of acceptance of such goods or services. In any case, it can be less than 45 days, but it cannot exceed 45 days. Such due date and the main word is date of acceptance and not the date of invoice. Both can be different. The date when it is accepted, whether the goods or for services, the relevant service is delivered. From that, within 45 days, the payment has to be made. Failing this, there is a compound interest which would be levied at 3 times the bank rate with monthly rate. 3 times, let's assume the interest rate is say 10%, then 3 times would be 30%. Such compound interest, compounded monthly, has to be shall be levied on in such cases, and the payment to suppliers, MSME registered suppliers, is to be made with such interest. Period of starting of interest would be the date immediately following the date agreed upon, that is the due date, or if such due date is within 45 days, then the date agreed upon. To enforce this provision, Form MSME 1 has been introduced under Section 9 of the MSMED Act to promote and develop the MSME. And we have also seen that Schedule 3, which we discussed, the proposed changes. So with aging analysis of trade payables, the dues to MSME also, along with disputed dues, have to be clearly mentioned. As we discussed, the government may make measures for development and promotion of MSMEs from time to time. And under this scheme, government has directed all companies to file the return of dues to MSMEs. Form MSME 1 is notified for this purpose. Form MSME 1 is a half-yearly requirement. Basically, it is so this 30th April, the due date is there for second half of the financial year 2020-2021. So, for example, if it is 30th April 2021, then it would be for second half of the financial year 2020-2021, from 1st October till 31st of March of the relevant year. So this MSME 1 has to be prepared, the name of suppliers, the PAN number of the suppliers, amount due to such suppliers, the due date have to be mentioned for each invoice, due date specifically and the amount, and also the reason for the delay to such suppliers have to be mentioned, the half-yearly requirement. Schedule 3, as we discussed, also provides for such dues. So for the corporate, even for LLPs in the form LLP 8, which is to be filed, such a disclosure is to be filed with that form. So for companies and for LLPs, such measures have been taken by the government. Points to remember is that obtain confirmation from MSME suppliers for the registration along with the balance confirmations and other confirmations. This also is to be mentioned. If any supplier is registered as MSME, we have to obtain the Udyam registration certificate which the supplier would have. Verify the Udyam registration that it is proper in order. In case supplier has Udyog Aadhaar, then switch to Udyam by 31st December 21, which is already over. Now, Udyog Aadhaar, older Udyog Aadhaar numbers would not be valid. Only the new Udyam registration is to be obtained. If company is registered as MSME, then inform all your customers. And nil return is not required to be filed. If there is any transaction, only then this return is to be filed. Nil return is not required. Then this compliance express, annual compliance express moves a little further, and this is the second stop, which is the form DPT3. The due date for the same is 30th of June. It is also an annual requirement. By 30th of June, this compliance is to be made. This is basically for return of particulars not considered as deposit, other than deposit. The same is notified under Companies Act as an exempted deposit. So, if any such receipt is there, then it has to be uploaded with this form DPT3. So, this is the e-form. The governing rule is Rule 16 and Rule 16A of the Company's Acceptance of Deposit Rules 2014. DPT3 shall be used for filing return of deposit. So there are multiple purposes of this form. It can also be used for filing return of deposit or particulars of return of transactions not considered as deposit, or both as well, by every company other than a government company. So relevant drop-down menu, the relevant button has to be selected for this. Auditor's certificate is not required for particulars other than deposit. So for that, auditor's certificate is not required. It's a one-time, it was notified, when it was notified as a one-time return, which was due from 2014 to 2019. And thereafter, it was an annual requirement. And nil return again is not required to be filed. So both this MSME 1 as well as DPT3, if there is no transaction, then nil return is not required. Very briefly, the particulars which are to be filed. So there is if it is considering that particulars not considered as deposit, there is a net worth, which as per most recent audited financials. For for example, 30th June 21, the audited financials for March 2021 is not available. Then based on 2020 financials, you can import the data. The net worth has to be disclosed here. And clause number 15 of that form contains the disclosures which are to be made, whether, as we can see, whether there is any receipt from a banking facility, whether bank overdraft, loans, guarantees, all such things. So banking facilities have to be included. Whether any due from any other company, so receipt, intercorporate borrowing are to be disclosed. Received against offer made for issue of instruments, bonds, NCDs, any such securities which are issued and due as on 31st March of the relevant year, which are received against such offers, the same has to be disclosed. Received from any person who was a director at the time of receipt. Very important. At the time of receipt, if such person was a director, then it is the exempt deposit. If he has resigned as a director, disqualified as a director, or any other reason, and then if such amount is received, then it will not be under this, then it will be a different case. During the course of business, in course of business, whether any advances or retention money, such transactions also have to be reported. Whether any amount brought in by the promoters in stipulation of lending financial institutions, that has to be disclosed. And amount from mutual fund, AIF, REITs, any such amounts received during the year, then that same has to be disclosed. Now we move further. The compliance express has moved to the third stop, which is the DIR3 KYC. First part was the MSME return. Second stop was the DPT3 particulars other than deposit. Next is the DIR3 KYC. So there is a web form as well, which is for annual compliance. And if there is a first time, so during the relevant year, 2020, 2021, for example, or during the current year itself, 2021, 2022, if during 2021, 2022, if any director has obtained fresh DIN, then such director has to file this web offline PDF form with all the details and the attachments therein. They have to file the offline form. And if there is an annual compliance for older DIN, the same has to be done by a web form. E-form DIR3 KYC for new DINs which have been issued in the relevant previous financial year. What is the web form? In the web form, you have to ensure that the email ID and the phone number which is mentioned, it is still valid and the director has access to such phone numbers and email IDs. There has to be a unique email ID and phone number for each DIN. That is also important because OTPs would be sent on such. They have to confirm the details and submit. If there is any change in the particulars, then DIR6 has to be filed first. As per the law, DIR6 has to be notified within 1 month from such a change of particulars, and then the KYC is to be updated. For the offline form, you have to mention the PAN number, which is mandatory for Indian nationals, passport, which is mandatory for foreign nationals. There is the Aadhaar card. If there is any, then the Aadhaar card number and also same to be attached. Excuse me. The proof of residential address, whether any utility bill, Aadhaar card, passport, as applicable as on record. If it is for a foreign national, then the same has to, and it is for a foreign national in English language, then it is to be notarized by a public notary, else it is to be apostilled by a consulate of Indian embassy. And if it is not in English language, it is also to be a certified translation in English. Email ID and phone OTP has to be mentioned. As we said, the separate unique email IDs and phone numbers for each director, and the same has to be uploaded. Due date for 2021 was 30th of September 21, and thereafter there is a 5,000 fee for filing after due date. And which also brings me to this another important aspect, which is that of a disqualified director. So for a disqualified director, just imagine a situation that a person who has his own setup, he is associated with some companies which are his own enterprises as director, and he is associated in other companies, whether as a consultant, whether as a professional director, director in professional capacity, or any other capacity, additional director, alternate director, any capacity. And let's assume that such director is appointed in 15 companies, which is permissible. 15 companies is appointed. In one such company, there is an issue of non-compliance due to whatever reason, due to certain reason. One such company has not carried out the required compliance and has not filed the annual return and the annual financials for consecutive periods. Such company receives notice from the ROC and is struck off by the ROC, and all the directors associated with such company are disqualified, including this person, Mr. XYZ. Let's say his name, Mr. XYZ, also is disqualified as a director. The consequence of such disqualification in one company is that in all other 15 companies, this person will automatically vacate the office by operation of law. This is the serious consequence. Why compliance, why governance is important. This is the harsh measures which are being taken in very they are currently even as we are speaking, there may be notices which the companies may have received, which they would be receiving as well for this. If there are filings overdue, then complete the filings, else the companies will be stuck off, directors will be disqualified. For 5 years, such disqualification would last. So imagine that person who would be disqualified from his own setup as well as in all other companies for 5 years. He will not be able to carry out any business under a corporate, uh, under a company or an LLP. Even for LLPs now, such disqualification provisions are in pipeline. So LLPs would also be taken in line with the Companies Act in most of the aspects. Such provisions are also in the pipeline. They are yet to be notified. But this is the scenario. First such lot which were disqualified from 2016, such disqualification was removed from with effect from 31st of October 2021. Such things were made active again. Only requirement was to file DIR3 KYC. For directors who have not filed DIR3 KYC form, then the form was to be filed. And if such form was filed in the past, then the web KYC was to be completed. And DIR12 was to be filed after this period, after October 21. DIR12 was to be filed by all such directors who were disqualified for being appointed again as directors in such companies. So now we reach at a junction stop for the compliance frame. It has carried out a significant journey from April till September. We have covered MSME, we have covered the DPT3, the KYC. Now it has come to an important stop. As we can see, it has also upgraded itself from a Mumbai local to a Tejas Express with all the information and filings that has been carried out and with all the companies which have joined now. So it has upgraded itself. And what happens at a junction stop? So what all takes place? There are, in certain cases, there are bogies added. The passengers meet their stakeholders, whether it's friends, relatives, family. The ticket checker checks the tickets of all the passengers. The tickets are mandatory. Ticketless travel is not as per the law, and it's a half-time break. So junction stops are normally longer stops, and there is a fork ahead. So the train has to now decide which route to take. Let's say, for example, we are at Kalyan Junction and whether to go to Khopoli or whether to go to Kasara, we have to make a choice. How to imply this in the current situation in the Companies Act? What is the implication of this table? Let's understand. By bogies added, I mean the auditor's report, the statutory auditors, secretarial auditors, the board report, the cost auditor's report. They are all added, they are obtained. Passengers meet their stakeholders, meeting thereby the stakeholders for the companies, which are the shareholders, the auditors, directors, the special invitees, and they meet the company at the annual general meeting. Ticket checker checks the ticket, meaning thereby that for all companies, the financial statements are approved at the annual general meeting. Of course, for a one-person company, there is no such requirement of a general meeting. It's only one member. So they have to be filed within 180 days of the end of the financial year. We have already discussed that. Tickets are mandatory, meaning thereby that this is mandatory for all companies. Till now, we saw there was, in certain cases, nil return not required. But now, this procedure is required for all the companies. There is a half-time break, which is the time limit for AGM, which we have already discussed. And there is a fork ahead. So by fork, we mean there are multiple returns, whether for small companies and OPCs, whether it is for like regular the companies, whether there are any XBRL filings, whether there is any NGTH certification, whether NGT 7, NGT 7A, whether any consolidated financials. So, whew. So all these are to be checked, and as per the requirement, as per the criteria, the relevant compliance is to be carried out. Let's go one by one with the sequence. The sequence, normally what happens is that the financial statements are prepared, audit is commenced, they are sent to the auditors for the report. Financial statements are signed by the board of directors and sent to the auditors for their signature and their report. The statutory audit, the cost audit, the secretarial audit as applicable is carried out. Board report is prepared and approved and signed by the board of directors. Then the annual general meeting is convened, approval is obtained at the annual general meeting, and then comes the annual return. This is the sequence which takes place at this stage. Very briefly, we will discuss about the board report as well. The board report which is required, the checklist which is there, the governing section for board report is section 134 subsection 3 and rule 8 of Companies Accounts Rule 2014. So board report, first stage is the board report at this stage. Assuming the financials and the audit reports have already been received, the board of directors has to prepare a board report. So what are the brief particulars? If you will see, we'll cover this board report briefly, but if you will see, it is in a way a summary of all corporate actions which the company has taken in this year, in the relevant year. So many disclosures are there under various relevant sections, and it covers most of the corporate actions. We will find out how. Excuse me. First part is the state of company's affairs. The finance, and what to check. So first, on the left part is the particulars, and on the right part is some comments or the checklist in a way, or the remarks, or what is to be checked. The left part is the state of company's affairs. What is to be checked is the financials, notes to accounts. You need to include, basically it is the extract of all the financial information in this state of company's affairs, whether it is the profit, loss position, the balance sheet extract, what has been the performance in the company, any significant information which the board of directors, the company wishes to share with the stakeholders, with the shareholders, that information has to be mentioned in this point, the state of company's affairs. What is to be checked? The financials, notes to account, whether company's performance, any information which is relevant to be shared. Key financial parameters also have to be included here. Material changes which affect the company are to be mentioned, along with the impact of such change, that also has to be mentioned here. Dividend, if any, the company which is proposed to be declared to the shareholders, including interim dividend, that has to be checked. The minutes have to be checked, very important. Whether the compliance has been made for the dividend, whether it is transferred into a separate bank account, whether it is paid within the due date, whether any unpaid dividend is there, how it has been treated, all that needs to be checked. Reserves, any amounts which are transferred to reserves, which we can get from the financials. The auditors, changes in the auditors, including the statutory auditor, cost auditor, secretarial auditor, internal auditors. All such changes have to be disclosed specifically. Appointments have to be disclosed. Any reappointment, casual vacancies have to be disclosed. Changes have to be disclosed. If any auditors, the reservation marks, the qualifications which by the auditors have to be disclosed here. The board of directors and committee. I'm sorry, before that, the qualifications, adverse remarks by the auditors have to be disclosed, and also the board or board of directors responses to such qualifications, that also has to be disclosed. Next is the board of directors and committees. The composition of such board of directors and the committees, any changes, whether in the directors appointment, in the KMP as well, whether it is the CEO, CFO, the company secretary, any such changes have to be disclosed. The minutes, very important to check the minutes, the resolutions for any changes, whether the registers of the company, the statutory registers are updated. The composition of committees have to be disclosed. The meetings, details of meetings have to be disclosed here. Even the board meetings, the number of meetings which are held have to be disclosed. Declaration by independent director wherever applicable have to be disclosed. The frauds, if any, reported by the auditors, they also have to be disclosed. Particulars of loans or investments under 186 wherever applicable, the same can be checked from the financials, from the statutory registers. Also important to check whether relevant approvals are there, board by way of resolution, whether board resolutions, committee resolutions, special resolutions, ordinary resolutions as applicable. Contracts or arrangements with related parties. They the disclosures have to be checked in the financials. Of course, in the financials and notes to account, the disclosures would be as per the accounting standards and the Ind AS, accounting standards 18 and the Ind AS, which are applicable as from case to case. As per this, section 188 has to be checked, and any transactions have to be mentioned here. Form AOC 2, which is the format for the related party disclosures, that has to be filled. And also the resolution authorizing such a transaction has to be checked. Form AOC 2 also would form part of the board report. This would contain the details whether relating to the transaction, the nature of transaction, the name of the party, the authorization of the board, the date on which the board resolution has authorized such a transaction, any advances paid, all such details would be mentioned. Details of joint ventures, associates, subsidiary companies, or any companies which are ceased to be such also have to be disclosed. AOC 1 is the form for details of such JV, associates, subsidiaries. The financial performance, the extract of the performance have to be mentioned in AOC 1 and will form part of the board report. Extract of annual return in NGT 9, this has been omitted. Now this NGT 9 requirement has been omitted, and such annual returns which are filed have to be placed on the company's website, and the website link of such website has to be mentioned in the board report where the same can be checked. Policies as may be applicable from case to case. The policies with whether with relating to directors appointment, whether corporate social responsibility, risk management, POSH committee, such policies have to be mentioned. As applicable, the gist of policies have to be mentioned, whether any committee is formed, the composition of such committees, the members, the chairperson of such committees, all such disclosures have to be mentioned. Also, respective laws have to be checked. For example, in POSH, the relevant law is Sexual Harassment of Women at Workplace, Prevention, Prohibition and Redressal Act of 2013. This is the POSH Act. This has to also the requirement of this section with respect to composition of the internal complaints committee, who can be the chairperson, what is the functioning. The relevant provisions have to be checked and report has to be prepared. CSR applicability and the annual report, we have discussed about the amendments in CSR. As per section 135 and the rules have to be mentioned, the committee, the composition of committee, the outline of policy, working of liability on the basis of the average profit of last 3 years and 2% thereon. The web link of the policy has to be stated on the website of the company, amount spent, amount unspent, carried forward, set off, all those amounts, details of ongoing projects and details of any project which are other than ongoing projects, all have to be detailed here. And if any capital asset is created, then the same has to be disclosed. unspent CSR for preceding 3 financial years, all these have to be. So these are the particulars of that revised annual return of CSR, which we discussed about. All these details have to be stated there. Very important amendment under CSR. Again, new regime in a way has been created. Steps taken for conservation of energy, technology absorption, foreign exchange earnings outgo as applicable case to case have to be disclosed. Whether formal evaluation of the board has been done. So it is applicable for listed companies and public companies, paid up capital more than 25 crores. So that has to be disclosed. Whether deposits are accepted during the year, then details have to be given, including any default in repayment. Wherever cost audit, the cost record, cost audit is required, the same has to be mentioned, or where not applicable, then the same has to be mentioned that it is not applicable. So one thing is important, that this 134 subsection 3 is mandatory. So all disclosures which are there have to form part of the board report. Wherever not applicable, specifically it has to be mentioned that yes, this clause is not applicable, but it has to be disclosed. And the director's responsibility statement, very important again, that applicable accounting standards have been followed in preparation of the financial statement. Adequate care has been taken for safeguarding. Accounts have been prepared on an ongoing or a going concern basis. Accounts have been prepared on a going concern basis. Device systems are in place to ensure compliance and they are operating effectively. And wherever applicable, internal financial controls are effective. Very important disclosure, because in the next this below the table, the penalty also has been prescribed, section 134 subsection 8. If any default is there or wrong statement, then penalty of 3 lakh rupees on the company, and on every officer, the penalty would be levied up to rupees 50,000. As we talked about the small companies and the OPCs, there is an abridged version of the board report. We have discussed the detail, the full version. Now for small companies and OPCs, this is the version where limited disclosures are there, which is the state of company's affairs, financial position has to be disclosed, any material changes and the implications of such change, the web address for annual return, that NGT9 which is omitted, number of meetings of the board, director's responsibility statement that has to be mentioned, details of fraud reported by auditors if any, explanation for such qualification, adverse remarks, disclaimers made, any changes in directors, KMP has to be checked, and material orders passed by the authorities have to be checked, and the POSH committee as applicable under the relevant tax internal complaints committee. So these are the limited disclosures in case of a small company. And as you can see, there is no specific disclosure for CSR or remuneration, technology absorption, and other such cases. So it's a limited version, the abridged version of the board report, which is a relaxation for small companies and OPCs. So now that board report is prepared and we assume that AGM are held, financials are approved, and our compliance train resumes its journey and reaches the stop number 4 of the journey, which is filing of financial statements. Filing of financial statements. The audited approved financial statements. So this is the normal the deadline which is there, the due date which is there. Audited approved financial statements are to be filed with the registrar of companies within 30 days from the date of the annual general meeting. Governing section 137. There is Form AOC4 for standalone and Form AOC4 CFS for the consolidated financials. Wherever applicable, HBRL is to be filed. The applicability is for all listed companies and its subsidiaries. Paid up capital the company with paid up capital of 5 crores or more, or turnover of 100 crores or more. If any such condition is hit, then HBRL would be applicable. Excuse me. Very briefly, the points to note down for this form AOC 4. The details of AGM held, which is a very important point for 2020 and 2021, these 2 years being exceptional. So care has to be taken for this, what is mentioned here, and the due date of the AGM, the date when it was held, all this has to be very carefully stated at in form AOC 4. Details of holding subsidiary companies, we can get these details from the board report, so that has to be mentioned. The auditors, including the SRN of ADT1, which is filed, that has to be disclosed. The financial statements, particular parameters of the financial statements as per the form, the same have to be disclosed. Directors, KMP who have signed, including the date of signatures, the care has to be taken that section 134 subsection 1 is followed wherever applicable. So whether it is any 2 directors of the company, including CEO or managing director, where any, or a company secretary, where any. So wherever such KMP is appointed, the same have signed the financials and including the director. Share capital particulars, changes in the year, addition, deletion, all such particulars that we mentioned. Principal products and services details that we mentioned. CSR spending, the details are to be stated. Another important clause is related party transactions. The particulars therein for related party, the name of the related parties, the relationship with such, the nature of contract arrangement, what we had discussed about form AOC 2 forming part of board report. So these details would be included here. The name of the related party, the nature of relationship, the nature of contract or arrangement with such parties, duration of such a contract, the date of when it was approved by the board, any amount paid as advance. So that has to be disclosed. Auditors report have to be disclosed. CARO disclosures, whether in the respective clauses, whether there is a favorable remark, unfavorable remark, disclaimer of opinion or not applicable. Corresponding disclosures are to be made. We have to attach the set of financials, board report, AOC 2, AOC 1, CSR policy as applicable to the relevant companies. We have to attach that. And just for 2021, as we said, being a special year, the due date has now for companies being extended till 15th of February 2022. That is the date by which all AOC 4, whether it is AOC 4, AOC 4 CFS, AOC 4 XBRL, whichever case, the same has to be filed by 15th of February 2022 without any levy of late fee. Likewise, for annual return NGT 7 or 7A as applicable, the due date is 28th of February 2022. Beyond such a due date, then late fee would be charged at ₹100 per day. For OPC, the due date is within 180 days from the end of the relevant financial year, which comes to around, if considering 31st March, then it comes to around 27th or 28th of September. So such AOC 4 has to be filed for OPC. If not, then this late fee would be levied. But for 2021, the late due till 15th of February, the late fees will not be levied. For SBRL filing, the tagging is to be done as per the applicable taxonomy, whether accounting standards or Ind AS, and same is to be filed with AOC for SBRL. Then the fifth stop, which is a mini stop, we discussed about the MSME, we have discussed in detail, but this stop is for the first half of the current financial year, which is 1st April till 30th of September. By 30th of October, this detail is to be filed with the ROC. Form MSME 1 is there for any such dues between 1st April and 30th of September. Nil return is not to be filed. we have discussed it. So moving on to this, the stop number 6, which is the annual return. So now it is nearing completion, the journey, and this is the stop annual return, which is in MGT 7. The governing section is section 92. Due date, normally the due date is within 60 days from the end of the from the date of conclusion of the annual general meeting. 60 days thereon we have to file this annual return. In case of small companies or a 1% company, the MGT 7A has been notified. For OPC, the due date for this is within 60 days from the end of 180 days from 31st March of the relevant year, which is 26th of November. Beyond that, late fee would be levied, 100 rupees per day. Of course, for 2021, as we can see, earlier it was extended till 31st of December 2021, but now the time has been given till 28th of February 2022. So till that time, late fee will not be charged. Excuse me, I'll just come. I think I'll need to charge this. Yeah, I'm back. Sorry for the break. So this for 2021 late fee will not be charged till 28th of February 2022. So this annual return MGT 7, brief particulars about this annual return. We have to include the details of the company, the AGM held, the details of the annual general meeting which would be held. So again, for this year 2020-2021, care has to be taken as to the due date of the AGM and the date of AGM held. And the details have to coincide with the form AOC 4 which has been filed. It cannot be different. The business activity of the company has to be clearly specified along with the percentage turnover. The particulars of holding, subsidiary, joint venture companies have to be stated there along with the percentage holding if any change is there. So what details were there in the board report, accordingly we have to mention it here. The share capital of the company, the ISIN details as applicable have to be mentioned. If any transfers are there, then the same has to be mentioned and also attached as a separate attachment. The list of transfers, the list of shareholders, share capital also, the promoter holding, the KMP director holding, all those breakups is there. Those details have to be. I mean, so many details are filed with Form MGT 7, and we really need all the records and registers of the company with us at the time of filing. Otherwise, so many details, there would be multiple shares, transfers, shareholding. So all these details very carefully we have to update and file. The detail of transfers have to be put along with the list of this attachment as well. The detail of debenture and securities outstanding, that detail has to be mentioned. The turnover details and the net worth details have to be mentioned. The composition of the committees, the members of the committees, the directors, the KMP, the number of promoters, members, all details have to be mentioned. Opening, current year changes and closing. Details of the meetings as we told, and also including the attendance as well has to be mentioned. If any remuneration is paid to the director or the KMP, then that detail has to be mentioned. Whether all applicable compliances have been followed, that certification is there in the form. And if anything is not complied with, then that has to be specifically mentioned. penalty and punishment details, if any, levied on the company under adjudication, that has to be mentioned, and also certification as and when applicable. And likewise in 7A as well. So, what are the attachments in this NGT 7? The list of shareholders, debenture holders, list of transfers as applicable, MGT8 certificate, which is a practicing CS certificate where applicable. So, it is applicable in case of a listed company or if a turnover is more than 50 crores or a paid up capital which is more than 10 crores. Then this MGT8 certification is applicable. MGT 7A is an abridged form of this annual return for OPC as we discussed, OPC or small companies. And certain disclosures are not there. For example, like certain certifications of compliances and other details are not applicable for a MGT 7A, and it is like an abridged format of a annual return. MGT 8 certification, as we discussed, where applicable, this listed company or turnover and capital criteria. So what is included in the certification? This certification pertains to whether all records, registers, forms are updated as per the provisions of the Act, whether all the meetings have been convened in accordance with the provisions of the Act as well as the secretarial standards. That has to be certified here. Loans to directors, if any, are there. The same as we mentioned. Changes in capital, whether any allotments, buybacks, changes have to be mentioned. Dividend, if any, declared, recommended, paid. The compliance is for the same has to be certified as per the Act. Signing of financials as per the provisions of the Companies Act, whether duly the provisions have been followed. Any appointment, reappointment, casual vacancy, basically any changes in the office of the auditors, the directors, the KMP, the same has to be disclosed. If any acceptance of deposits are there, then the provisions have been followed. Charges, if any, registered during the year, modified during the year, satisfied during the year, closed during the year, all such details have to be specifically mentioned. Any loans, investments, guarantees under Section 186 has to be mentioned. Alteration, if any, made under the memorandum and articles of association, details of same have to be mentioned. Lastly, we come to this completes the MGT 7, this AOC 4 details, MGT 7, MGT 7A, MGT 8, all such annual returns. And lastly, we come to auditor's appointment, which is also an important clause. If there is any change in the auditor or auditors are not reappointed, then this at the AGM, then ADT 1 is to be filed within 15 days of appointment. Even in case of casual vacancy, the board appoints and then there it is confirmed in the EGM. Even in that case, the ADT 1 is to be filed. Auditors are appointed for 5 years at a time, subject to rotational auditors conditions under Section 139, subsection 2, wherever applicable. Qualification criteria is also there, criteria under 141 section. When appointed, the auditors are required to give a consent that they satisfy all the conditions which are mentioned here, that they are eligible to be appointed, that the appointment is within the limits of the Act, and whether any proceedings are pending against the auditor. ADT 1 is to be filed with the auditor's details, which includes the name, address, mobile number of the auditor, PAN of the auditor, contact details, and the aforesaid certificate, which is there under Section 141, has to be enclosed as a attachment to the ADT 1 form. Just to revise, to review the long journey, the compliance journey ends with this. Just briefly to revise, 30th April is the due date for MSME 1 half-yearly return for October to March. DPT 3, the deadline is 30th of June. DIS 3 KYC web form, 30th of September. AOC 4, assuming that AGM is on 30th of September, the due date would be 30th of October, 30 days from the date of AGM. only, and MGT7 60 days of AGM, so 29th of November, only for 2021. The due date for AOC4 XBRL, AOC4, AOC4 CFS is till 15th of February 22, and for MGT7, MGT7A, the due date is till 28th of February 2022. And there is also this MSME annual return on 30th of October, which is due from April to September of the relevant year. So this brings me to the end of this session on the relevant latest updates and the intricacies and annual filings, the deadlines, due dates. I hope that this has been useful to all the participants, and I really thank the conveners of JB Nagar CP Study Circle, WRC ICI, for the opportunity given to me. Over to you, sir. Thank you very much.
Thank you, Rajji. There are few questions which I request Manish Dedia ji, today's coordinator. So he will share his screen, and the questions can be taken. So you can stop sharing your screen, sir. Manish Dedia ji, are you there? Yes.
Yes, sir.
You can take the question, sir.
Okay, I'll start.
Yes, yes.
So first question, whether CSR spending is mandatory for private companies. As per the applicability, if it falls under any of the criteria under section 135, then it is applicable for all companies, every company, and there is no exemption if it falls under that criteria, which is turnover, net worth, and the profit criteria. What are the various limits required for mandatory spending of CSR funds and exemption limits for various entities for not falling in CSR spending? Again, section 135 contains this, and limits are that net profit of last 3 financial years have to be calculated under section 198. The adjustments have to be made. The profit has to be derived for the preceding 3 years, and that average profit has to be derived, and 2% of such an average profit of last 3 years is the liability of CSR spending. The turnover, net profit, and the net worth criteria is as per section 135. Accordingly, this liability of CSR would arise. In case an advance is paid to implementing agency for CSR by a private limited company, and due to the current situation, the agency cannot utilize it, does the agency need to refund the amount, and would it need to be deposited in unutilized CSR bank account? Advance is paid. So that here we will have to check that owing to current pandemic situation, it is not utilized. The implementing agency could not utilize. So we'll have to check whether it is for an ongoing project or it is one-time use. If it is not used, then of course, I mean, if it is not directly used for the activity, then of course, this if it is for a ongoing project, then it can be deposited in the unutilized CSR bank account, unspent CSR. And if it is not for an ongoing project, then it is to be contributed to the Schedule 7 funds which are mentioned, whether it is PM CARES, PM National Relief Fund, the Clean Ganga Fund, the Armed Forces Veterans, and those funds. So the next additional disclosures are applicable for balance sheet as on 31st March 22. That's correct. So the financial year ending from 21-22, this the additional disclosures would become applicable. Are additional disclosure in the Schedule C applicable to each company? Yes, it is. Every company it is mentioned. So wherever Schedule 3 is applicable, these have to be taken into consideration. Format and manner of submitting quarterly returns for WC facility. So this is it's clarified that quarterly returns are not under Companies Act. they might be applicable in the relevant bank. So the from case to case, from bank to bank, it may vary. So wherever such returns have been filed, then the disclosure, the auditor's report has to mention the same, and also the disclosure has to be made. Wherever not filed, then not filed. Yes. So it would depend on bank to bank and company to company. If turnover is less than 20 crore in financial year 1920, more than 20 crore in financial year 2021. Okay, while filing NGT 7, showing it's a small company, file 7A. While filing 7A, it's saying not a small company. What to do as it is not allowing. So this is a technical issue at the MCA side. Better to raise a ticket for the same, because as it actually, if it is a small company, as per immediately preceding year, if it is a small company falling under the definition, system automatically prompts, like the concerned professional has rightly said, that it automatically prompts to file 7A or 7. So in this case, then better to raise a ticket. It is a technical issue with the form, and the same can be resolved by the MCA. If small company under construction stage, how criteria for turnover to be decided? As per the turnover as disclosed in the financials or the income tax. So based on that, as per the financials, whatever turnover is there, so accordingly the stage can be decided, whether small company or for normal company. Please confirm bank rate as announced by RBI applicable for bonds or bank rate given by banker, which may be varied. So for bonds, so for the risk-free rate of which is notified by RBI, so accordingly that rate is there, not the banker this rate. Is this for MSME one mandatory for private limited company? Yes, it is for all companies which have dues to suppliers exceeding 45 days from the date of acceptance of such goods or services. What if vendor has given MSME declaration in the last quarter and the delay were in payment before receipt of MSME certificate? Do we need to disclose delay happened before receipt of declaration from MSME vendor? Answer is yes. There are cases as well. There is a MSME facilitation center which handles such disputes, and there are cases. Basically, the idea is to promote the MSME. So that's why the same has been favoring the MSMEs, and even if the certificate, in fact, even if the registration is obtained after the transaction, even then the MSME would be protected. There are judgments for that. In case MSME payments to be made within 45 days of receipt of goods or service, if vendor not submitted tax invoice within 45 days or not appearing in GSTN portal, it is good to hold the payment. Of course, I mean, that is where the call has to be taken, whether income tax or GST versus the statutory requirement. The rule is that either the due date, 45 days due date, or the date of acceptance. So accordingly, the call has to be taken. It's basically a business decision to be taken, but the rule says this. Is it mandatory to publish annual accounts in website for private limited companies? So annual account, I think the question would be the annual return NGT 7 or the NGT 9, which has now been omitted. I believe that is the question here. So even for private companies, wherever website is there, you have to mandatorily disclose the annual return, and where website is not there, I mean, that clarification has not yet come from the government. It might come anytime, it might not, we don't know at this stage, but wherever website is there, the same has to be disclosed. Is director responsibility statement, compliance of AS, financial control, etc. apply to non-executive directors such as independent and part-time directors? It is a director's responsibility statement which is a part of board report. So it is a part of board report and it is to be signed by the directors as per the applicable provisions of this Companies Act. So it will be applicable, and all directors basically would be liable. Next, please.
I think we had completed all the questions. Okay. So in case anybody is having any questions, so they can unmute themselves. Or
So I think there is one question. Annual accounts means profit loss balance sheet for private company to publish when they have website. So I would suggest that check the provisions of Companies Act. As per my understanding, the policies and the annual return has to be mandatorily published in the website. Check the provision once, whether it is to be or not. That's what my answer would be. Yes, sir.
yeah. So I think there are no questions, and it was a great session. And for the entire session, more than 250 participants were there, listening patiently. Yeah, and this is the need of the hour. This topic also. So now I request our deputy convener, CA Jayesh Takkaji, to give the formal vote of thanks. Over to you, Jayesh ji.
Yeah, thank you, Krishna ji. Rajbhai, truly speaking, it was a very wonderful and very informative session. So before we move towards the proposing of a vote of thanks, most of the members, they are asking for your informative PPT. So we ensure our member that Rajbhai is definitely going to share his PPT. A lot of efforts he has put in while compiling this PPT. So all we are going to get this PPT through our email kind of thing. Now the Rajbhai, the way you took these sessions, very soft spoken, and the very detailed information you covered up in your sessions. Initially, we were planning to have these sessions. We had a thought whether we will be in a position to cover two topics simultaneously regarding the amendments in the Companies Act and the issues related to amendments in annual filing. But within a 2 hours limited period of time, the way you have covered and touched upon all the important issues and the amendments, it was truly wonderful and very informative. So thank you, Rajbhai, for giving your valuable time on Sunday morning. And we propose our hearty vote of thanks on behalf of our JP Nagar CP Study Circle, WRC of ICI, and on behalf of all the participants, our members. We thanks our today's coordinator, Manish Dedia ji also. Thank you all for attending today's sessions. Thank you. Over to you, Krishna sir.
Thank you, Jayesh bhai, for giving this wonderful. Thank you. And now since we are already completed the session, so we close the session for the day. Have a good Sunday to everybody, and thank you.
Thank you very much. Thank you.
Thank you, Raj bhai, once again. Yeah, thank you.
Thank you very much.